You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan. Thanks so much for joining us at Masters in Trading Live. I get on here live every single day, 11 o'clock Eastern. I get on here, we go over the market, and usually I'm going to share a couple of good ideas. Today, we got 4 topics to cover. Volatility is barely nothing, but stocks seem to be moving all around. So 4 topics for you. Ethereum popped 15% yesterday. We talked about the creative trader wins. I'm going to show you how we got a little creative trading Ethereum. 2 important topics. Please watch these topics, share these topics, save these topics. Trade entry, trade exit. So freaking important. Personally, I think the whole stock market is a game about managing money. I think entry points are more important than what stock you trade. You want good entry points. You want to learn how to manage money. Finally, the gold strip. The gold strip, what does that mean? Well, if I'm in the gold pit and somebody asks for a market on the gold strip against front month futures, that just means that someone wants to trade the front month futures against every other future contract. 1 against 2, 1 against 3, 1 against 4, 1 against 5. We're going to do a very basic example of the gold strip, but we're going to compare it to a couple of different metals. It'll be a lot of fun. Let's go to the slides though. Okie dokie. The creative trader wins. We say it all the time, but what the heck does it mean? Well, let me show you what it means to me. Because Ethereum jumps, right? Ethereum jumps because we are getting closer to an ETF. An ETF is a really, really easy way to bring in a whole bunch of money. ETFs allow everybody to invest, right? You can invest in your IRA. It's just very easy. So the creative trader wins. We're bullish Ethereum, bullish ETH. But when the grayscale ETH product, ETHE, got down under a 20% discount once again. Now it got under a 20% discount once Bitcoin filed for their ETF. They get approved. Everyone assumed ETH would be next. ETH sold off 22%, 23% discount. What we suggested is, guys, we want to buy ETH, not just ETH. We need that extra E rather than buying ETH relative to USD. And you can see the difference, guys, in the trades since Friday. ETHE is up 44%. Meanwhile, if you were just long ETH, you made a paltry 21%. The creative trader wins. Think outside the box. There's many different ways to skin that cat. Okay. We're going to start with trade entry. You have an opinion. You want to get long a stock. How do you trade it? How do you get long? And what the heck do you do? Here's what I suggest. Angie here, really, really nice comment. I'm going to let her kick this off. Learning to tranche. Learning to tranche has been awesome. So when we talk about tranche, a tranche is how you get into your trade. If you want to risk $1,000, your 3 tranches might be 333, 333, and 333. This way, you're slowly getting into the trade. You're not always going to buy the low. You're not always going to sell the high. The original option's for $1.20. Okay, well, we're going to tranche in because they went for sale. Okay, they went on sale. And let me show you what that means. Because BHP is going to be the purple line. And this is just May 1st. All copper is ripping higher. Copper is flying higher right now. These are two copper companies. Rio against BHP, very, very tightly correlated. Well, copper continues to rip higher, and so does Rio. But for whatever reason, BHP goes against us. Rather than thinking, oh shit, I bought for $1.20, here it goes, it's going to go against me, I'm the worst trader ever. No. We want to think, wow, there's a great sale going on BHP on aisle 4, so we can continue to buy, tranche in, and build our position. This is a topic that's talked about often. Here's Ken here, talks about tranching into BABA. Another example, BABA, not the best entry, but when the stock goes down, he's sticking with it. 72, 70, 68. Why? Because he's confident. Mike here, tranche. So if we look at BABA, Ken, we go all the way back here until that 86 entry point. Ken wanted to stay in BABA. We like to say sometimes the easiest way out of the cave is you have to go back in the cave and find a different way out, because it's really easy just to give up and think, oh no, here it goes again. Everything I do is bad. Or we can have confidence and say the market is going to move up and down. It's an entry point game. How much are we willing to risk? And when BABA goes down to the low 70s, this is where Ken was willing to add to his position, tranche it to his position. So when it finally makes that big move, he's been able to get his cost basis down and still enjoy a really, really good trade. I can't say it enough, partially because it's a fun word to say, tranche. Tranching in, tranching out. How do we get out though? Once we're in, guys, how do we get out of our trades? We're going to slowly tranche in. And how we get out is we are looking for something called the free trade. A free trade. What is it? Now, I opened the Discord room back in 2021. A little fun fact, Master Than Trading had a private Facebook room before Discord with a small community. Since 6/19, there have been 139 results of people writing this word, free trade. What is a free trade? Let me show you. Again, let's go back to Angie, because Angie used the verbiage, still holding a free trade, which I like. Cool. Here's what we mean when we say free trade. And when we're in trades, for those out there wanting to fish on their own and managing their own positions, we want to tranche in, tranche out, but we want to get to be those free trades. So let's use an example of BHP. And BHP, let's say we tranche into the 62.5 calls. Okay? The 62.5 calls, I'm going to use the 60 calls in this example because it's going to make more sense. So we're going to tranche into the 60 calls. Okay? And let's have the example that BHP was trading 50. We're buying the 60 calls, and this is what we did. So let's say we bought it high for $1.50, and then we bought some more of it for $1, and then we bought some more of it for 50 cents. Okay, maybe we bought five, and then maybe we bought 10. Okay, so that's 500 tranched, 500, And let's say we did 3 of them here to get us like a 450. And so now these are 3 different tranches into BHP. Okay? We have $3 of risk with BHP, and we have 18 options. The way to get a free trade is if somebody sold the 65s 10 times, then you're bringing in $3. And so 10 of these and 10 of these would cross out. And that would be your free trade. You would still have 8 of these on, but the whole idea of the free trade is if you buy something for $1, you want to be able to sell something for $1 as that position rallies, and that is what we call a free trade. Why is it a free trade? Because you have no more risk, and your upside is the difference between those 2 strikes. 2 very, very important topics. Okay, we have trade entry, and then we have trade exit. Now I'm going to take you to a divergence trade. Okay, so this is going to be a divergence trade. And let me explain to you what we got. Gold and silver is going to be right here. Gold, silver. Gold and platinum is going to be right here. And gold and copper is going to be right here. Now let's say that these 2 are expensive and this one is cheap. Okay? So how do we value this? Okay, we're trying to say, look, hey, they're moving together. When they're moving together, here's an opportunity. But right now, what the heck? What the heck's happening? How can we express an opinion? Here's how you do it. So let's buy and sell. Because we're long, well, that'll get us long this blue line, right? Buy gold, sell silver. Again, guys, this is an example. Don't get too overwhelmed. This blue line is buying gold, selling silver. These other lines are going to be selling gold, buying platinum, buying copper. It's just a spread, right? So the purple, clean this up a little bit so you guys can see. If here it looks like this, these 2 we're saying are expensive, and we're saying this is inexpensive. So the blue, we bought gold, sold silver, and these were selling and buying, right? Selling and buying. Well, these 2 cancel each other out. So now gold short, silver short, platinum and copper long. This is a divergence trade. We're backing in to value. These 2 are expensive. These 2 are inexpensive. Gold, silver, expensive. Platinum, copper, inexpensive. Next chart. Next chart, what does this show us? Next chart is going to show us silver against copper. Silver is expensive, copper is inexpensive, right? Watch this. Wow. Silver, copper. If you sell silver and buy copper, you're making a bet for this to go down, just like it did every other time that it's traded up here. So right now, we can conclude that silver is expensive relative to copper. These are divergence trades. We have our divergence trading program, but ever since I started trading professionally since 1997, floor of the Chicago Mercantile Exchange, floor of the Chicago Board Options Exchange. Every single stop throughout my career has been some form of a divergence trade. I started trading S&P futures against NASDAQ futures. I traded bonds using a divergence trade. So right now, gold and silver, you can clearly see, are super expensive relative to platinum, relative to copper. Now, for those who have been following Masters in Trading Live, you know that we've been long copper through BHP. Well, on the all access portion of this program, you guys hang on because I have a brand new copper trade for you that I'm going to share because copper continues to stay very, very cheap. For those that are still in our BHP trade, this gives you confidence to stay in that trade. Patience. Again, big believer that creative trader wins. Trade smart. I'll see everybody 11 o'clock Eastern and all of you in the all access. You guys don't go anywhere because I got a wing dinger in copper to trade with you. See you guys.